What's going on, everyone? In this video, we're going to talk about what is range trading. So if you've ever heard a trader or someone on social media say, we're stuck in a range, there's a lot of chop, right? Typically, a lot of traders tend to lose a lot of money. They tend to overtrade and they tend to go on full tilt. If you don't know what that means, that basically means making more trades than you need to, kind of making some money, giving it all back, losing some money. It's an absolute shit show, right? So in this video, we're going to be looking at the stock chart for Nvidia, ticker symbol NVDA. It's one of the stocks that I like to trade. I'm going to give you some real life examples, show you guys how you could potentially benefit off of a range bound market. Now, everyone likes when, we're just consistently making lower lows, or making higher highs after higher high after higher high. But it's when we get into these periods of what is called distribution, where there's, a battle going on in price action between the bulls and the bears, is typically when a lot of traders, especially newer retail traders, tend to give a lot of their month's profits back or a lot of their weekly P&L back, and they tend to overtrade and they tend to lose a lot of that liquidity. So what I want to show you guys here is we're just going to go back 5 days in time. I'm a day trader. I'm going to typically trade options on Nvidia, on Tesla, Microsoft, AMD, things like that are trading with inside the NASDAQ 100. And then I also trade for a few different prop firms where I'm going to be trading /NQ, which is the mini contracts for the NASDAQ, or I'm going to trade the micros, which is MNQ, when I want to size down a little bit. So I'm typically watching these stocks on a day in and day out basis. Like if I look over to the left, some of the stocks that I have on my watch list: Amazon, Apple, Nvidia, Microsoft, Triple Qs, AMD, Shopify, Meta. All of these stocks are the names that I like to trade, just because you don't really need to trade a lot, and you don't really need to get a big move. These stocks have such big ranges. You can get $1, $1.50, $2 very, very quickly, and it can kind of make your day. So that's why I love trading these stocks, and it's why I love watching them so much. So what is range trading? If we just kind of go back to last Thursday, look at the range that we had on last Thursday. We came down. Each green box is going to signify a level of demand, okay? And then that box is going to change from green to red or red to green, depending on the back test and depending on the breakout. So at one point in time, this box here was red, because this was acting as a level of supply, meaning that if we go back to last Thursday, anytime we were trading at the bottom of the range, okay, you can see that once we popped up to the top of the range, which is called supply or resistance, whatever you want to call it, right? Supply, demand, support, resistance, doesn't matter really what you want to call it. It's, call an ace and a spade a spade. But if you look at what was happening to the price action each time, we were just kind of ping-ponging and barcoding in between this range. This makes it very, very difficult. And the reason why it makes it very difficult is because a lot of newer traders think that once we start to come up here, we're going to break out, they get long, and then we pull back, okay? And then they try to go short because they think we're going to break down, and then we consolidate sideways, and then we pop, right? And you get stopped out. So what you have to do when we're going through a period of distribution or consolidation or a period of range or a period of chop, you may hear all of these terms on social media and kind of, start to wonder, what is the difference between chop and what is the difference between a range? What is the difference between supply and what is the difference between, resistance? It's all the same thing. It doesn't matter. Tomato, whatever you want to put on it. As long as you can identify what's going on in the chart, you can have a better overall approach. You can understand where to put your stop losses. You can understand where to put your take profits at. And that's what it's all about. I don't care if you're trading stocks in a NASDAQ or you're trading Forex. I don't care if you're trading crypto or you're trading commodities. It doesn't matter if you're trading futures or you're trading equities. It does not matter. A chart is a chart. Candlesticks are candlesticks. It is what it is, right? So if we look at what's going on here, you should be a buyer, okay, at demand, and you should be a seller at supply. And the reason why is until we break out and then back test either one of those levels or that range, you have to give the bulls and the bears the benefit of the doubt, okay? We should be buying here and taking profits at supply. We should be selling at supply and taking profits halfway down or into demand, okay? Until we break out, which you can see we did break out yesterday, and get some sort of back test and then pop is when the directional bias has to change, right? So if we look at where we opened up today in the pre-market, we opened up a little bit red, we consolidated sideways, but look at where we hold, guys. Look at where we held. We held the top of the range going back to the top of our supply zone. So this previous area, this previous range that we were trading in that was acting as a level of resistance now has formed and acted as a level of support. So anytime that happens, as a trader, the more screen time that you have, the more, easier it's going to be to kind of identify these setups. But as we come back down, you can kind of see, hey, this area that was previously acting as a whole level of resistance, not only did we come down and test it, but we came down and aggressively bounced off. So where can you kind of find your entry? Where can you kind of put your stop at? Well, there's two ways that you can do it, right? I have a 20 period moving average on my chart. We can use an entry and exit that way, or we can use these overall demand zones. If you are someone that is okay with a little bit more risk, then you can use these zones, right? These zones are kind of spread out. If you look at NVIDIA's zone here, the previous supply zone, which is now acting as new demand, it's a $2 risk, right? Essentially from 270 all the way up to 270, 250, it's a $2.50 risk. If you're not comfortable with a $2.50 risk, you either need to size down or find a new entry or trade a smaller time frame. It doesn't necessarily mean you have to change your bias, but what it does mean is maybe you need to change your time frame to get yourself a little bit better of a stop loss, or you have to trade smaller size. For example, if you trade 100 shares, right, which is one lot size on NVIDIA, maybe you might want to trade 25, right? So if you do lose $2 on the trade, potentially, it's $150, $200 loss. But if you make $2 on the trade, it's a potential $150, $200 win, right? So it's like a 1-to-1 R to R. Another reason and a misconception that a lot of traders see is, you'll see a lot of traders start to throw out there, well, I don't want to take any trades unless it's a 2-to-1 or a 3-to-1, or I'm looking for, reward of 4-to-1 on my risk, right? So if I'm going to risk $100 on a trade, I got to make $400. That's absolutely ridiculous. Guarantee you, guys, go ask any trader who's been doing this longer than 10 years, any trader who is doing this, who is making consistent money. Are they consistently taking 3-to-1, 4-to-1 on their return on investment? Absolutely not. Some traders are taking, 0.5, 1-to-1. It's like this. I'm a more profitable trader and I'm a 60% trader. My win rate percentage on my trades is around 60%. Sometimes it's like 55, but I'm still overall more profitable than I am a losing trader, just due to the fact that my losses are a lot smaller than my wins. Sometimes you get those trades that run $2, $3, $4, $5 and you're only risking $1. Sometimes you get those trades where you just need to take the quick 50 cents or the quick dollar. You have to kind of understand and identify what you should be doing when you get into those situations. So if we kind of look at where we're at here, we should have been a buyer down here this morning once we tagged this previous resistance. Once we tagged this previous resistance in the pre-market, and once we kind of bounced off at that first hour candle of the day, this box now becomes green, because this is now telling me that there are some buyers down here in this region, right? There are some buyers down here in this region. And now that we've successfully broken out of the trading range, okay, we've broken out of the trading range, we've now come down and back tested this range, and then we've now popped off, right? So if you're looking to kind of wonder, well, why do I have this 20 period moving average here? What's the overall setup on this? The overall setup on this is just kind of giving me that directional bias, right? So if we kind of look at where we kind of broke over the 20 period moving average, right? We broke over the 20 period moving average at that 7 o'clock a.m. Pacific Standard Time candle. We put in a high of around 277.88, and we're currently trading at 278.39. So we're up almost 75 cents to $1 on the overall move. This is also an entry here. So what we would do is, if we're trading below the 20 and we're above our new demand zone here, as soon as we put in this top wick, what I want to see happen here is one of these next preceding candles to confirm the top of this candle that then changed and closed over the 20 period moving average. And I want to start taking profits into my next supply zone. My next supply zone is going back to yesterday's highs. You can see the opening range here on the video. We put in a high all the way up here at around $281, and we had a lot of choppiness action between 279. So between 279 and around 281, there's definitely some problems there with some sellers. So again, just because I get long either here off the demand zone, right, or I take an entry here on the break over the 20 period moving average, does not mean that in any way, shape, form, or fashion that I think that we're just going to skyrocket and put in, you know, some astronomical high to 300. Okay, now could it happen? Absolutely, but I can guarantee you there's probably going to be 5 or 10 more setups in that road to 300 that I don't really, you know, need to stress myself out and trying to get this moving and take it for 20 points. All I'm looking to do is on my particular day trades, if I'm trading options, I'm looking to just get a point here, a point and a half, $2 I would consider a home run trade. 50 cents is like a break even trade. It's like a 1-to-1. I'm looking to get in, take 50 cents, take 80 cents. I'm looking to just kind of stack those small wins and stack those small days, because I know that those days will come where you catch that $2-3 move, right? And it's all about keeping the lights on and staying in the business. So again, as we start to approach this demand zone, I would be thinking about taking profits. As of right now, like I said, we're up 75 cents, almost $1 on the entry move. And if we would have tagged down here off the open, once we came down and kind of back tested this new support here, you know, we're up about, let's get the exact price, right? Even if you would have bought anywhere in this middle candle, or you would have bought over this 20 period moving average, 275.84, and we're currently trading at 278. So you got about a $2 move there. If you are trying to hold for more than $2 and you call yourself a scalper or you call yourself a day trader, you're being greedy, right? Now, like I said, you're gonna get those days where the stock moves $3, $4, $5 on a ticker like Nvidia, on a ticker like Tesla. But you have to be content with identifying the moves and being able to take $1, $2. The more times you can replicate that process, the better off of a trader you're going to be, and the more money you're going to make at the end of each and every single month. So many traders are in a rush to get to this invisible finish line. And what that means is they have this idea and this picture in their head that they're going to be driving a Lamborghini in 30 days, that they're going to be trading off of a yacht, that they're going to be, you know, quitting their job tomorrow and making 6 figures overnight. It doesn't happen that way. The only way you make more money in this business is not by trying to stretch out your profits, meaning, you know, you're looking for a 5-point move, a 1,000% gainer. It's about increasing your position sizing. So as you get comfortable and as your account size continues to grow, what you want to do is, if you're trading options, and let's say you're normally trading 2 options contracts on Nvidia, after 30 days, after 60 days, after you start to get profitable and consistent, you go up to 3, and then it's 4, and then it's 5, and then you're trading 10 contracts and 20 contracts and still taking those $1, $1.50, $2 moves. Now the difference between making $1 on 2 contracts, which might be $100 to $200, when you're trading 10 contracts, it might be closer to $400, $500, $600. So you can see how those wins start to get a lot bigger with the more size that you're trading. Now just understand, you can always lose more money when you're trading more size, but again, I only recommend to size up when you've been consistent and profitable for at least 60 to 90 days before you increase your position sizing just a little bit. That doesn't mean going from trading 1 contract, being profitable for 30 days, and then trading 10 contracts. That's how people blow their accounts. You're profitable trading 1 contract for 30 days, move it to 2. Do that again for another 30 days. After 60 days, move it to 3, and then 4. Gradually increase. If you go through a little bit of a rough patch emotionally, psychologically, the market is not what you expected, then start to size down, right? Start to size down. When the market was trading in this range here, I wasn't trading my normal lot size of 10 contracts. I was moving it down to 3 and 4, right? Just due to the fact that I knew my moves weren't going to be that big, and I knew potentially I could get stopped out, right? So what is a range? What is range trading? This is a range. It's a period of distribution. It's a period when we're stuck in between a channel. The channel was down here sitting at 261. The top of the channel was sitting at around 270, right? So we got basically an 8 to 9 point range on Nvidia. Again, just understand Nvidia's range is going to be big because of the price of the stock and the way that it moves. But again, we can't expect to be making home run trades when we're stuck in a range. When we break out of the range is when you really want to capitalize. Going into yesterday, you can see we closed at the top of the range here. Anyone who swung overnight opened up from a price of around 270 all the way to a price of 280 from Monday into Tuesday. And then obviously we pulled back to test this area. But again, that's a hell of a trade. This would be considered a home run trade. So why would you go and trade 10, 15 times in these 2-3 days here, get chopped around, when you could have sat patiently, took a scalp here for 30, 40, 50 cents, you know, maybe sat on your hands here, maybe took another trade for $1 here, and then, you know, understood, hey, we're at the top of the range here. We look like we're breaking out. We got a clear stop loss under the 20 period moving average or a breakdown below the demand zone here. If I take an opportunity and swing this overnight and it does work out for me, then I'm going to potentially make a lot of money. That's how you can kind of look at it. Again, it's all about trying to anticipate the move, but by managing your money and your capital in a professional manner. So it doesn't mean that you're going to sit here and think, well, I think that we're going higher. I think that we're going lower. Let me just throw all my money at this. If I win, I win. I don't, right? No, that's not what you're doing. Essentially what you're doing is, I understand we've been in a range. Okay, I understand that if we do break this range, we've got a new supply zone sitting up here around 5, 6, 7 points higher. I understand that if we do open up or close below the 20 period moving average, I'm going to stop out. That's my max risk, right? My max risk. Or maybe you're a share trader and you're trading 20 shares and you want to give yourself a $2 risk, right? That's going to be about $180, right? So if you're comfortable risking $180, telling yourself that as long as NVIDIA doesn't break down below this range here, I'm going to hold this long, then you're up about $200-300 at this particular point, maybe closer to $180-200 if you're only trading 25 shares or something. But imagine if you're trading, you know, 200, 300, 400 shares, guys. You could have essentially, you know, made your week, and now you can go kick back and go to the beach. Now you can go take your dog for a walk or take a day off or not have to worry about, you know, whatever is going on in the market the rest of the day. Again, also, here's another side tip, non-related to range trading, but guys, if you make your money depending on your account size, let's say, for example, you're trading, you know, $5,000 account, and you make $100, $200, that's good, guys. That's good. You do that more times than you don't. You're going to be growing your account very, very quickly. You're going to preserve your mental equity and capital, and then that's how you're going to be a more consistent trader. You're going to learn a lot more about yourself. When it's people who are trading with $1,000 to $2,000 and they're trying to consistently make $500, $2,000, $1,000 a trade, that's when you get blown out. Again, remember, there is no race. There is no magic pot at the end of the finish line. This is an invisible finish line. Even though we're day traders and we can make money very, very quickly, it's about staying in the game for a long period of time. I hope this video makes sense. If you guys want to learn my complete strategy, you guys want to potentially get funded to trade futures, you guys want to potentially add more revenue streams, you guys want to learn how to master your mindset and your psychology when it comes to trading, get one-on-one coaching, make sure to join evolutiontraders.com. That is my personal website with my online community where I'm live 5 days a week. I'm also helping people on a day in and day out basis. We're going over my watch list. We're also going over and just kind of shooting the shit when the market is, you know, doing whatever it's doing, right? FOMC is going on. We're right there, you know, BSing around. It's a good trading kind of environment, just due to the fact that trading can be a very, very lonely game. You tend to get in your heads a lot. You can tend to overanalyze and overthink things. It tends to help when you have someone who can help you with a trading journal and a trading plan based on your account size, and having other traders to kind of work with on a day in and day out basis. Again, I will see all of you guys on the inside who decide to take me up on this offer, evolutiontraders.com. It's a one-time fee. Again, why do I charge for this? Because it's like anything else in life. This is a business. I trade for a business. That's how I make my bread and butter. That's how I pay my bills. I also have different revenue streams. I have real estate properties where I have one rental property. I've got a property that I live in. I also have a few side businesses that are non-related to trading whatsoever that I don't even speak about on this channel, acting as multiple income streams. And again, guys, I spend a lot of time on these videos and a lot of time teaching, helping, and available to coach. I have to charge for my time. It is what it is. This is America. If you don't like it, that's okay. There's always other places to learn. I put out so much free content you can learn from my videos alone. But if you want to get that extra, then definitely join Evolution Traders. Again, check out my channel. I have over 1,500 videos. I've been making videos now for, you know, over 2.5, 3 years. But again, I will see you guys all in the next one. Make sure to like, comment, and subscribe. Until next time, guys, happy trading.